Ma'am, recording has also stopped. Okay, you have started.
Then this is variable cost. Okay. Sales revenue. Okay. So in the short run, the sales revenue should be sufficient enough to recover only the variable cost. So for that reason, the concept of contribution is introduced, and it says that in the short run, if the sales revenue which is generated, if it can recover the break-even point, that would be sufficient enough. So for that reason, it's split into variable and fixed cost. So then, this is cost and revenue. This is not. So beyond the break-even point, sales exceeds the total cost. When sales exceeds the total cost, it will take care of the variable cost of it. Beyond that, no more fixed cost, because fixed cost is recovered at the break even point. There is no more fixed cost which has to be recovered, and only the variable cost. And beyond the break even point, the profit will be higher than what it was till that point of time. Till that point of time there was only loss. So then from then onwards, the profit will be much better, because only variable cost will be recovered or absorbed from the contribution which is generated. So it is split into two different parts. That is, total cost is split into variable cost and fixed cost. So now this is the equation wise. So based on this uh, uh, equation, so this becomes the base for the entire chapter. So based on this, we have various ratios and formula given, which are useful for us in decision making. I hope this graph is clear. Then I will go to explain the equations. Did you understand what is the base behind this um, marginal costing equation?
Yes, ma'am.
Okay. Okay. So let's see. So under cost volume profit analysis, the first equation which is given to us is what is contribution. Contribution is equal to sales minus variable cost. Sales minus variable cost, and this variable sales minus variable cost contribution. Contribution will recover fixed cost. Contribution minus fixed cost is equal to profit. So once we have contribution, see, sales minus variable cost is contribution, that's fine. After that, um, from the contribution, when fixed cost is deducted, this will become profit. Because, so that is the equation. So beyond that, let's see what else do we have. This is an example which is given. I don't think we need to get into trying to understand what is this example. It's very basic. It says that the contribution, the number of units are given as 10, 100, 0, 100, 500, 1000, 1500. Contribution at this is given because a product has sales of 20 pounds and then variable cost of 10. So contribution automatically is 10 pounds. Just multiply contribution per unit into the number of units to find out what is total contribution. From that, when fixed cost is deducted, we find out what is profit. So from this tabular form, we understand that initially it is loss. Loss keeps reducing and comes to the point where it becomes zero. Beyond that, once it crosses that, we see that there is profit. Okay, very basic example which is put in here. Okay, so graphically, this is the graph. So it says that um, on the x-axis output and on the y-axis, both the cost and revenue, we see that fixed cost is this blue color line where it says that it remains fixed till the maximum output, and the total cost starts from the fixed cost. Variable cost starts from uh, the origin, from zero number of units. It's not there in this particular picture, but then we know that variable cost starts from the origin or zero output. Then after that, fixed cost is this one, which starts from the fixed. I'm really sorry. Total cost is the curve which starts from the fixed cost point and then it rises. After that, we see that sales revenue starts from zero number of units and then it keeps rising. And then at some point, it becomes break even, wherein the total sales revenue is sufficient enough to absorb both the fixed cost and the variable cost, or which is equal to the total cost. Fine. We've learned this part, but the equations are given. So let's see what are the equations also. Easy way to remember. Then we'll go back to the word file and then let's see how do we understand the logic behind the um, formula. So the first one what we've learned is about the marginal costing equation. The second one says we call it as contribution by contribution by sales margin, or the Indian version of it with very famous that we understand this to be as cost uh, contribution by sales margin, or we call it as PV ratio, profit volume ratio, is equal to, the formula is contribution by sales into 100. Why are we calling it as profit volume ratio? The reason why we are calling it as profit volume ratio is, um, see, in the short run, contribution is the profit, because if there is a positive contribution, this anyway will take care of the fixed cost in the long run, is the assumption of marginal costing. So the profit part of it is taken to be as the contribution, not the final profit after the fixed cost is also deducted. So in the short run, this is the profit for a volume of sales. So that is the assumption. So we are so used to this term called as PV ratio, but then we do not see that in ACCA material. It is referred to as contribution by sales margin ratio. So contribution by sales margin ratio, if sales is the base, sales is 100%, what is the percentage of contribution? That's the logic. So contribution into 100 by sales. Now this will become the base for further decision making. So next one we have the concept what we have learned about break even point. Now break even point is understood in two different aspects. One is if we are calculating the number of units of break-even point is one thing, and then second, we have to understand that what is break-even point in terms of sales revenue which is generated. So there are two different break-even point formulae. The first one has fixed cost divided by um, contribution margin per unit. That's the formula. The second one, it says that, let's see what is the logic behind that also. Fixed cost divided by um, C by S ratio. What is that? Contribution margin contribution by sales ratio. Let's see what is the logic behind this. Okay. The third one in the series, in the list, break-even point in units. So what do we see from this particular equation? Break-even point is a point where there is no profit, no loss. That is what we have understood till now. So now, from this point, this particular equation, we see that contribution minus fixed cost is equal to 0. There is no point, there is no profit, there is no loss, isn't it? Break-even point is a point where there is no profit, no loss. So profit will become 0. So how do we equate that? If profit is equal to 0, it is a point where contribution is exactly equal to fixed cost. That is the logic there. So contribution is equal to fixed cost. That is what it is conveyed here. This is a situation where contribution is equal to fixed cost because profit is equal to 0. So when we equate contribution and fixed cost, that is the point where it is break even. Okay, that is the point of break even, where it breaks even. So if that is the way we have to equate them to understand what is the break even point in units. So what are we doing? The numerator we took the fixed cost, the denominator we have taken the contribution. So we are equating both of them. But the point here is we are trying to calculate what is the number of units. Let's say if at all, if we are in some other context, if we are trying to calculate what is cost per unit, how would we calculate what is cost per unit? Cost per unit is equal to total cost divided by number of units. Is that the equation which we do? Total cost divided by number of units. So what if we have to find out what is the number of units? So number of units goes to the other side and then cost per unit comes to the denominator. If at all, if we have to find out what are the number of units, so number of units is equal to total cost divided by cost per unit. So the same logic we are applying here by equating contribution and the total cost. So to find out what is the number of units, the number of units equation is total cost divided by cost per unit. That is the equation, cost per unit. Do you see the logic here? So the same thing we are applying here. We are applying it as fixed cost and contribution. Both of them are equated. So they are taken, that is the point where both of them are equal. But then because since we are focusing on calculating the number of units, we are taking this in the denominator to be as contribution margin per unit. That's the logic. Okay. If we are trying to find out the volume of sales or the amount of sales volume, then also we are trying to equate fixed cost and contribution margin, but then contribution which is converted, which is already converted as a percentage of sales. So contribution by sales ratio. So the numerator we have fixed cost, the denominator we have contribution by sales ratio. I hope I made sense and then it's clear. Is that clear? Okay, all of you?
Yes, ma'am.
Okay. So then the next fifth one, if we have to, now at the break-even point, we see that there is no profit, no loss. But sales, any level other than the break-even point, if we have to find out sales level, so that is called as desired sales or targeted sales, whatever is the name which is given. Desired sales, same thing in units. And then we have desired sales in the value of sales, in rupees or in dollars or whatever is the currency which is used. Okay, we have to find out that. See, at the break-even point, we see that there is no profit, no loss. But then sales happen at various other points also. We see that the sales revenue is the red color line, which starts from zero number of units and then it keeps increasing proportionately. So in that situation, any other level other than the break-even point, if we have to find out, how do we calculate what is the amount of sales? Okay. Um, the the same formula what we have taken here for break-even point, we can take that one, which is fixed cost divided by contribution margin per unit. Okay, fine, we are taking that, but then what is the difference between that? We see that at the break-even point, no profit, no loss. But other than that, below the break-even point, below the break-even point, there is loss. Above the break-even point, there is profit because the sales curve is below the total cost till the break-even point, and after the break-even point, sales revenue curve is above the total cost. So in these two situations, we see that either there is a loss or profit for any other level other than the break-even point. So any level other than the break-even point, either there is profit or loss. So we are taking the help of the same equation but by making some change here. So we see that any other level will have either a profit or a loss. Profit plus or minus profit or loss. This thing should be divided by contribution margin per unit. Okay. So now, in case of what if it is desired sales in uh, dollar value or in currency value, you tell me what would be the equation.
It will be fixed cost plus or minus profit or loss divided by contribution margin per contribution by sales ratio.
That's right, exactly right. Okay. So here we will have this one as so in the question, it could be like there is a desired level of profit which they are want to earn. So the profit level is given to us, and then we have to calculate the sales level, or sales level is given and we have to calculate the profit because it's only substituting in the equation. Either ways, whichever is given, the other one we can calculate. Right. The next ratio here would be margin of safety. Margin of safety. When are they safe? When are they safe? They are safe beyond the break-even point. The safety comes into picture once the total cost is absorbed, and later on, it is only the variable cost which has to be absorbed. So, or in simple terms, when are they safe? They are safe when the sales revenue or the sales curve exceeds the total cost curve, or it goes beyond the break-even point. So after the break-even point, we see that they are safe. So beyond that, why are they safe? There is no more fixed cost which has to be absorbed. That is the logic. That is the explanation for that. So the safety situation arises once they cross the break-even point. So in equation term, we can put the equation as margin of safety is equal to actual sales minus break-even sales. There is another equation also for margin of safety. Margin of safety is equal to profit by cost contribution by sales ratio. That's a situation where there is a profit. So when there is a profit, what is the percentage of profit is? So here they are considering the profit and the contribution part of it, which talks about the safety part of it, wherein uh, the safety level will be at the ratio of their contribution margin. Beyond that, because it is all only the variable cost. So this is another equation which is given. There is another equation also which talks about margin of safety as a percentage. So let's see if we come across, I'll put this. Here it is down. Margin of safety is equal to budgeted output minus break-even output divided by budgeted output into 100. So here it is converted into percentage. It's only the percentage conversion. We already know the margin of safety is the sales, the budgeted sales or actual sales or whatever is the sales, my over and above the break-even sales. So budgeted output minus the break-even output gives us the margin of safety. If the budgeted output is 100%, how much is margin of safety percentage? So it's just converting it into percentage. So we can write this equation as margin of safety percentage of margin of safety. So here it would be margin of safety by budgeted actual whatever is that budgeted sales into 100. It's very easy to remember these equations. The presentation could be different, the explanation could be different. Maybe you have to arrive at the unknown variable, but only when you have complete hold on these equations that you will be able to substitute this in the question and then arrive at the answer. Fine. I hope I mean, you are able to understand this one. I am clear with the explanation part of these formulas.
Yes, ma'am.
Okay.
Yes, ma'am.
Okay. So then we go ahead and then see the variations into this. The contribution to sales ratio, we have it as contribution per unit by unit sales per unit. See, ultimately, total contribution is contribution per unit into number of units. Total sales is selling price per unit into number of units. So these are variations of the same formula. So break-even point in sales volume is fixed cost divided by contribution per unit, because we are calculating the number of units. If it is the sales volume, the contribution expressed in as a percentage of sales is there in the denominator. Then target profit for a sales level, any level other than the break-even point has a profit or a loss thing. Then this is the break-even chart, basic break-even chart we've already looked into. The contribution break-even point talks about below the break-even point there is loss, above the break-even point there is profit. Okay, this is profit volume chart. So it says that till the break-even point they have a loss, and beyond the break-even point there is a profit. What are the assumptions of cost volume profit analysis? It talks about uh, cost behavior is assumed to be linear. So linear is there is a particular pattern in which they would change. So the linear relationship is given by an equation. Are you aware of what is the linear equation? The linear equation is given as y is equal to a plus bx. That's the linear equation. So it is assumed that there is the relationship between these costs is in a linear format. So what is a linear format? There are two different types of cost. The broad classification according to cost volume profit analysis or marginal costing. There are two types of cost. One is variable and one is fixed cost. Fixed cost remains fixed. It does not change till the optimum level or within the relevant range. It will not change. So linear equation has y is equal to a plus bx. There are two constants a and b. So there are two different parts. First part is a, which is completely a constant. The second part of it is bx, wherein there is one element of a constant b, and the second part keeps changing with the changes in x. As x keeps changing, the second part of it keeps changing because b again is a constant. So what does this equation indicate? It indicates that this is split into two parts. The first part of it is A is fixed cost. So it doesn't change at all. It doesn't change at all with any change. It will not change. So it remains fixed. So the first part of it is fixed. The second part of it, Bx, is the total variable cost, wherein V is the variable cost per unit and X is the number of units. As the number of units keep changing, variable cost also changes, and it changes proportionately because B is a constant. So let's say B, if it is 2, at 0 number of units, 2 into 0. At 1 unit, 2 into 1. At 100 units, 2 into 100. At 1000 units, 2 into 1000. So here we see that the second part of this equation keeps changing with the changes in x, but that change is proportionate. It keeps changing with the changes in the output, which is x. As x keeps changing, bx keeps changing proportionately. So bx is the total variable cost. So the first assumption is the cost behavior is assumed to be linear. Okay. The second one says that revenue is assumed to be linear. Revenue also keeps changing proportionately, proportional. Okay, there is no component of a fixed cost. There is only as the number of units keep changing, the total sales value also keeps changing proportionately. For 0 number of units, revenue is 0, and as the number of units produced and sold keep increasing, that also changes proportionately. Then another very important assumption is all that which is produced during a period is sold. There is no concept of any closing stock. Since there is no closing stock, there is also no opening stock for the next period. Okay, similarly, previous period no closing stock, current period no opening stock. So there are no opening or closing stocks which are considered here. All the stock which is produced is sold during the current period. It ignores inflation. It always assumes that the sales mix is if there is if there are more than one product, one type of product produced, uh, then the number of units of each product which are sold, okay, the product mix, um, the mix of sales which are taken up for these products, it is constant. They do not make changes in the sales mix. So that is constant. So that these are the assumptions of cost volume profit analysis. After that, we start with limiting factors. So let's quickly go through the questions which are there. Um, and solve few questions from the exam kit.
Sure, ma'am.
Question number so like we have solved last week on the Excel sheet. I will take these questions to the Excel sheet and then we can solve the questions there on the Excel. Just 1 second, give me some time. Are you able to see the Excel file?
Yes, ma'am.
Okay.
Yes, ma'am.
The first question says that a company makes and sells product X and product Y. Twice as many units of product Y are made and sold as that of product X. Each unit of product X makes a contribution of $10, and each unit of product Y makes a contribution of $4. Fixed costs are 90,000. What is the total number of units which must be made and sold to make a profit of 45,000? Now here, till now, from the explanation, we understood that in the denominator, we have contribution margin per unit. So let's see what is the total number of units that have to be made. What is the formula for that? Let's write this one. Desired sales is equal to, we have fixed cost plus profit, the whole thing divided by contribution per unit. Okay, that's the formula. That part is fine. So the question says that a company makes and sells product X and Y, but it is not one product. There are two products in this particular question. The question says that it makes and sells product X and product Y. Twice as many units of product Y are made and sold as that of product X. So what does it mean? If X is sold 1 unit, Y will be 2 units. Fine. But the denominator talks about the contribution margin per unit of one product. Here there are two products. In that case, the formula changes slightly. What does the formula say? Let's look into that. The other details are, each unit of product X makes a contribution of $10 per unit, and Y makes a contribution of 4. So when there are more than one product, any number of products, more than one product, the formula changes slightly as, here desired sales is equal to fixed cost plus profit divided by, we take the average contribution, but then just not simple average, it is the weighted average contribution margin per unit. So that is the point here what we have to note down. If it was only one product, we simply take whatever is the contribution margin per unit. Okay, then, but the denominator, but there are two products, so the denominator has to be calculated as weighted average contribution margin per unit. Let's see how do we calculate that. Weighted average contribution margin per unit is equal to, let's see the calculation as, if it is product X, if it is product X, for every 1 unit of product, let's put it like this. Twice as many number of units of product Y are made and sold as that of X. If one unit of X is produced, then 2 units of Y are produced. Okay, that is the proportion in which X and Y are produced. X is generating a contribution. This is mix. How many units are produced and sold? That's the mix. And the contribution for each of them, the contribution is, for X it is 10, Y it is 4. We just have to multiply these things. So here it would be, so the numerator, weighted average contribution margin per unit, I hope you remember what is the formula of X bar W, weighted average formula. What is the weighted average formula, which is equal to sigma Wx, W being the weight, sigma Wx by sigma W. If this is the formula, so W, this mix is W and contribution is the main variable. So this is X. So contribution into X. So W into X is 10 and 8. We have calculated the sum total of that. Then we have to divide it by the sigma W. How much is sigma W? Sigma W is 3. Do you see that? Do you see that? Am I audible? Okay.
Yes,
Okay.
ma'am.
Okay.
Yes,
So,
ma'am.
so what is the value here? The value will be 18 divided by 3. So how much would be 18 divided by 3?
6.
The rest of it will be the same. It's only the denominator weighted average contribution margin per unit has to be calculated. Then the numerator, how much is fixed cost? Fixed cost is 90,000 and they want to earn a profit of 45,000. So for us, desired sales is equal to, or targeted sales is equal to, desired sales is equal to, based on the formula, we have fixed cost to be as 90,000 plus profit margin is 45,000, then divided by the contribution margin, which is equal to weighted average contribution margin, which is equal to 6. So quickly solve this one, which is equal to 135 divided by 6. So 22,500.
Yes, ma'am. Correct.
Okay. 84th question, answer is 22,500. Then I hope it is clear to everyone.
Yes, ma'am.
Okay.
Yes.
Any doubts, you can stop me. Even if I proceed further also, you can also always ask me to come back and then clarify a particular thing. Then coming to 85th question, Betty's Limited is considering charging the way it is structured by asking its employed staff to become freelance. Employees are currently paid a fixed salary of 240,000 per annum, but would instead be paid $200 per working day. On a typical working day, staff can produce 40 units. Other fixed costs are 400,000 per annum. The selling price of a unit is $60 and material costs are $20. What will the effect of the change on the break-even point of the business and the level of operating risk? Let's see once again. At present, the employees are paid a fixed salary of 240,000 per annum. But they want now that to be changed. Instead of paying a fixed salary of 240,000 per annum, they want to move that to a a system where it is paid in the form of a variable cost. So they want to convert the fixed cost into variable cost. Okay, so that would instead be paid $200 per working day. Okay, on a typical working day, staff can produce 40 units. So according to that, whatever is the prediction, for that the wages will be paid as the number of units of a particular working day into so how many number of working days into per day rate is $200. Okay. So they're moving from fixed to variable cost. The selling price is 60. The other cost, apart from labor cost, the other cost, material cost is 20 per unit. It says, it asks us, what will be the effect of the change on the break-even point of the business and the level of operating gain. Effect we have to understand is at present what is the scenario, and if they change to another method, what will be the impact. So first we have to find out what is the present level, then we have to understand what is the impact after the proposed change. So proposed change also has to be calculated. So present level, proposed change also has to be calculated. Let's see question number 85. Present level, let's put it as present level, present situation. We need to find out because they are asking us in terms of break-even point. So let's find out what is break-even point at present. The formula is the same, fixed cost plus fixed cost divided by contribution margin per unit. So fixed cost by contribution margin per unit. How much is fixed cost at the present level? At the present level, what is fixed cost? Fixed cost is equal to, right now there is a fixed labor cost of 240,000. Apart from that, they are also paying other fixed cost which is 400,000. So this will be equal to 640,000.
640.
Yeah. Then at this particular level, what is contribution? One second, just give me 1 second. Okay, sorry about that. Let's continue. Contribution margin per unit. So contribution margin per unit is equal to, how much is sales? Sales value is selling price per unit is 60. 60 minus only one variable cost is there, which is material. Material is the only variable cost because labor till now at the present in the present situation, labor is paid at a fixed rate, so that is not a variable cost. So 60 minus 20, which is equal to, that is 40. That's the present scenario. How much is break-even point? Break-even point is equal to 640,000 divided by 40. So that is equal to 16,000. Then if we are talking about the proposed level, now in case of proposed situation, how would the things change is what we have to see. What will be the fixed cost in the proposed level? They will no longer have 240,000. They will have only 400,000 as fixed cost. There would be no more 240,000. So this is just 400,000. Fine. After that, their variable cost now varies. If the variable cost varies, how does it vary? Let's see. One variable cost is material 20 as it is. The second variable cost is labor cost. So we have to first find out what is variable. So material, we have it as 20. Then talk about labor. What is that they are saying? Labor cost is how much? What's the labor cost?
200.
200. Okay. So labor cost per working day is 200. We want it as per unit. Do you see that? We want labor cost to be as per unit, but labor cost is given as $200 per working day. How many working days do you think they are? How do we arrive at uh, labor cost per unit? On a single day, on a typical working day, they can produce 40 units. So what is cost per unit?
5.
5. Yeah, 5. So labor cost is 200 per day. On a single day, 40 units are produced. So that will be 5. So the total variable cost is 25. Total variable cost is 25. Variable cost per unit is equal to 25. So how much is sales margin, contribution margin? Sales is 60. So this would be is equal to 60 minus 25. Is that clear, all of you? The calculation is
Yes,
clear?
ma'am.
Okay.
Yes, ma'am.
Okay. So the earlier their break even point was 16,000. Now the break even point is 11,420 429. Okay. So 11,429. So what is the difference in that? Um, Earlier it was 16,000. Now it is 11,429. So the break even point is reducing by 4,571 units. So we have two options, option B and option C, talking about the break-even point reducing by 4,571. That's the first part of it. The second part of it says that what is the impact on the level of operating risk? Level of operating risk, is it increasing or decreasing? That is the point what we have to understand. Do you think the risk is increasing or decreasing? Give me an answer and then also give me the logic. I mean, how did you, is it B or C? Obviously, A and D are ruled out now. We have to go with either B or C. Is it increasing or decreasing?
It might increase, ma'am, because the reason is it depends upon how much they produce per day. So we can't tell for sure that they'll be producing so much, no?
Okay. And I'll come back to that one. Someone. So you say that we should go with B or C? Should we go with B or C?
See,
C. So you mean to say that operating risk goes up?
yes.
Okay. Operating risk goes up. Okay. Anyone else? I mean, what is the main reason why this is split into variable and fixed cost is to see that in the short run, they only need to focus on absorbing their variable cost. And in the long run, as the time passes by, that will take care of the fixed cost also. So if they have to if the proposed level of break-even point is coming down to 11,429, so it means to say that in the break-even point will occur at 11,429 units itself. They need not wait till 16,000 to break even. Okay, so only they have to focus on reaching that break even point of 11,469. Earlier they had to wait, I mean, or rather in the present level they have to wait till they touch the 16,000 units mark, and beyond that only the profit will be earned. Now according to the proposed change, their break even happens at 11,429 units itself. So beyond 11,429 units, they will start making profit. So otherwise, if they have to wait till 16,000, see, it again is subject to demand. Demand should be there till they reach that 16,000 units level. So if they cannot reach that 16,000 level, they will not be in a position to start earning the profit itself, because external factor, demand is one external factor. When demand is one external factor which is not in their control, the aim will be um, um, to see that they break even as early as possible, right? um, so on that note, we see that um, according to the proposed change, their fixed cost is reducing, so the contribution will have to take care of only 400,000. So they will reach that break-even point faster than according to the present situation. The proposed one will, for that, the break-even point will happen much before that the present level. So on that note, operating risk goes down. B is the answer. We go with the B as the answer. I hope I'm clear with this one. You understood the logic.
Yes, ma'am.
Yes, ma'am.
Yes, ma'am. Ma'am, if you don't mind, will you be able to save this Excel sheet while?
Yes, yes, yes. Last class also I saved. I'm saving it now.
Okay, thank you, ma'am.
ಬರ್ತಾ ಇದ್ದೀನಿ ಮೇಡಮ್, ರೆಸ್ಟೋರೆಂಟ್ ಇಂದ ಪಿಕ್ ಮಾಡ್ಕೊಂಡು ಲೊಕೇಶನ್. ಇನ್ನೊಂದು 5 ನಿಮಿಷ ಬಂದೆ, ಬಂದು ಕಾಲ್ ಮಾಡ್ತೀನಿ. ಹಲೋ.
Okay. We'll continue with the other questions. 86, it says that P company makes two products, P1 and P2. Budgeted details of which are as follows. There are certain details which are given to us, and then the budgeted product. Let me copy the question and then I'll get the. Do you see the Excel sheet on the screen?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay. Um, the question says P company makes two products, P1 and P2. Budgeted details of which are as follows. P1, P2, selling price is 10 and 8. Cost per unit, direct material, labor, variable overhead, fixed overhead, and then profit per unit. These details are given to us. Then budgeted production and sales for the year ended 30 November 2015 are P1 has 10,000 units, P2 has 12,500 units. The fixed overhead costs included in P1 relate to apportionment of general overhead costs only. However, P2 also includes specific fixed cost totaling 2,500. If only P1 were to be made, how many units would need to be sold in order to achieve a profit of $60,000 each year? So we are asked to find out what is the desired sales level. Desired sales unit is what we are asked. At present, they are making two products, P1 and P2. So P1 has certain details. All the costs, whether it is variable cost or fixed cost, they are given as per unit, right? And the proposal is to see that in future they would continue with only P1 and discontinue P2. So once again, when we look at what is the definition of fixed cost is a cost which remains fixed. So even at zero number of units, it is the same. So as this, once it is incurred, even after a while, if they want to discontinue a particular product also, we see that fixed cost is unavoidable. So one more characteristic of fixed cost is that it is unavoidable. When a decision is taken to make a change, to bring down the number of units, to discontinue one particular product or anything also, whatever is the fixed cost will continue to be incurred. The same amount of fixed cost will be there. So it is also called as an unavoidable cost, unavoidable fixed cost. But doesn't mean that all fixed costs are completely unavoidable. Fixed cost also, there is a cost which is called as traceable fixed cost. So if it can be traced with a level of activity, in certain cases we see that that can be eliminated. So that's why it's called as traceable fixed cost. And most of the time we see that the fixed costs are unavoidable. Example of traceable fixed cost. Let's say that they are operating at a, let's say that there are two units in a factory. Both of them are carrying on with the uh, production activity. So there are two supervisors taking care of these two units. So if there is a decision to discontinue one unit, in that case, two supervisors will not be needed. But otherwise, the nature of supervisor's salary is fixed cost. It's a fixed cost. Supervisors are paid fixed salary. So if that is the case, if one supervisor, like maybe he's absorbed somewhere else, he's placed somewhere else, his salary cost need not be incurred for this particular factory production, wherein because one unit is closed down. So the salary of supervisor, which is basically fixed in nature, also can be eliminated, also can be avoided because of discontinuing one activity. So some of the fixed costs, not all of them, but some of the fixed costs can be eliminated, avoided, or we call them as traceable fixed costs. So the focus here in this particular problem is, it says that the fixed overhead costs included in P1 relate to apportionment of general overhead costs only. However, P2 also includes specific fixed overhead totaling 2,500. So there is a very specific fixed overhead cost to the extent of 2,500. Now the decision is, if they take a decision about discontinuing one product and continuing with only one product called P1, how many units would need to be sold in order to achieve a profit of 60,000? Let's first start writing the formula. After we write the formula, we'll discuss about what happened to the fixed cost part of it. Let's write the formula. What's the profit they want to earn? 60,000. So that part of it is clear. 60,000 is the profit which they want to earn. And then the fixed cost part of it. So let's first find out what is the total fixed cost in both the situations. That is, for product P1 and product P2, what is the total fixed cost? Fine. Fixed overhead costs are given as 1.2 for P1 and 1 for P2. So 1.2 for P1 and 1. So let's see what is the fixed cost. At present, what is the fixed cost? We'll put it here. P1 will be 10,000 units into 1.2. And for P2, it is 12,500 units into 1. So just see how much is the cost. It would be 12,000 for P1 and for
24,000.
okay, 12,500. So we have 24,500 is the total fixed cost. This point is fine, but then now P2 will not be produced. So does it mean to say that the amount of 12,500 will not be incurred? It will continue to be incurred unless and until the amount is traceable fixed cost. So that is what is the point here. The total fixed cost is 24,500. Now, even if P2 is not produced also, still the fixed cost will continue to be incurred unless there is a component of traceable fixed cost. What does the question say? It says that the fixed overhead included in P1 relate to apportionment of general overhead cost. However, P2 also includes specific fixed overhead totaling 2,500. One is allocated fixed cost, one is very specific fixed cost, which is 2,500, which will be not incurred if P2 is discontinued because it is specific, identified with P2 only. P2 is there, that cost will be there. P2 is not there, that cost will not be there. So how much is that? That is 2,500. So once we deduct that 2,500 from that, so if P2 is discontinued, fixed cost if P2 is discontinued. P1 will be as it is. P1 will be as it is, but P2 will be different. P2 will be
10,000.
10,000. That's right. So 12,500 into 1 minus 2,500. So 22,000. Okay, 22,000 is the fixed cost. The rest of it, I think you can do. Quickly do.
What's the answer, ma'am? 18,636.36.
I don't know. Let me see. That's right. 18,637.
636. Okay, nearest round of decimal is 636.
Yeah. Well, if you got the answer,
Ma'am,
yeah.
I couldn't hear what you just said.
Did you get the answer? I said.
Yeah, ma'am. 18,636.36. That's what I.
You see the next one?
Yes, ma'am. The variable cost in this case will be 4 point. Contribution will be 4.4. Like we can mention here, it will be easier.
Okay, fine. I'll do that. What is contribution margin per unit?
4.4.
Contribution margin per unit. Since there is only P1, so only for P1 we have to calculate. That will be the total amount of variable cost is 3.5 plus 1.5 plus 0.6. There are three items of variable cost. Selling price is 10. 10 minus, there are three components of variable cost, 3.50 plus 1.50 plus 0.60. Five point six. 4.4. Variable cost, contribution margin per unit is 4.4. So the formula here would be fixed cost is 22,000 plus the desired profit is 60,000 divided by 4.4. $82,000 divided by 4. Okay. 18,630. Okay, we'll do the next one.
Yes, ma'am.
87th question says that an organization manufactures and sells a single product, the G. It has produced the following budget for the coming year. Sales revenue is 5,000 for producing 20,000 units and selling them. 5,000 is sales revenue. Then manufacturing cost is the fixed cost, variable cost. Then selling component is also fixed and variable. The total cost of sales is 4,600, profit is 400. If inventory levels are negligible, what is the break-even point in units? I think this is very simple. You just calculate this one, break-even point in units.
You cannot see the question, ma'am.
Okay. I'm so sorry. I thought I have. I'm sorry. Now, 87th question.
Yeah, ma'am. Now we
Yes.
can see. Yeah.
Yeah, please do this one. It is very simple. Find out what is the selling price per unit. How much is selling price per unit? Total fixed cost, we have two items of fixed cost. One is 1,600 is one component. Another one is 1,200. So 2,800 is fixed cost. Selling price per unit is, there are 20,000 units and selling price is, sales value is 5,000. 5,000, in fact, actually it's 5 million. Let's simplify that. We can eliminate that or just divide it by 5 million by 20,000 units if you're not comfortable with decimals. So if it is 20,000, it should be 301, 101, 250 or 225? 250. See, 5 million, no? These are in zeros. Do you see that? So if it is 5 million divided by the number of units are 20,000, 5 million by 20,000 gives us 250 per unit. Variable costs are two items, 1,400 and 400. So 1,800. So 1,800,000 divided by 20,000. 1,800. So that should be 90, I think. Am I correct? 90? Able to do? Or you want me to do? Able to do? Not.
Yes, ma'am. 17,500. Correct. We got the thing. Yeah.
Got it, yeah.
No, it was so silent. That's it.
We basically use fixed cost divided by sales price minus variable cost. That formula
That
here. I use that formula. I don't know if there is any other formula.
completely when you do that, the total contribution you have taken. Did you take the
So
total contribution?
basically, I used fixed cost divided. I did it for first per unit. That's 2,800 divided by sales price, that is 5,000 minus the variable cost. So I got it for per unit. I multiplied it by 20,000 units. So I got 17,500 break even point.
Okay. That's another way. That's what I said. See, the logic, if it is there, we can do any way. First, we can directly find out what is contribution. That is 5,000 minus 1,800. The rest of it is contribution. In one go, you can divide it by 20,000. Otherwise, you can go ahead calculating what is the
Per unit.
we want per unit, no?
I did it per
Break
unit.
even sales you can calculate, because sales is there, variable cost is also there, contribution by sales into 100, that percentage you calculate, arrive at break even sales divided by the number of the selling price per unit 250, that also. So there are various ways. It is like a puzzle. Whichever way you take, you arrive at the answer. So the logic is important. What has to be done, in any way we can do. There are various ways in which it is presented. Okay, what you've done is also good. Would you want to take a break? Because last week also you asked, so I thought.
Oh, ma'am.
Yes, ma'am.
No, no is one answer.
What, Ashish, full on fire, huh?
Let's take a break, ma'am. Let's take a break.
Okay. Okay. 10 minutes? Quickly we'll.
Yeah, ma'am.
I'll put the recording on pause.
Okay, ma'am, sure.
You remind me
Sure, ma'am, yes.
when we. The next one is question number 88. A company manufactures and sells a single product with the variable cost per unit of 36. It has a contribution ratio of 25. The company has weekly fixed cost of 18,000. Very simple. We do not know. The only thing what we know is variable cost is known to us, but we do not know what is contribution margin per unit. And it is mentioned that the contribution ratio is 25%. So contribution ratio is sales minus variable cost is contribution. So after deducting the variable cost, it stands at 25%. So if sales is 100%, if sales is 100%, we do not know what is the selling price per unit. Variable cost automatically will be 75% because the contribution margin percentage is given to us as 25%. Contribution margin is 25%. So the 75% value only that we know, which is 36. I think we can find out all the other things. If 36 is 75%, what is 25%? So here it will be,
Cross multiply.
that's it.
Divided by 7.
So contribution per unit is 12. So 18,000 divided by 12 is the answer. €1,500. Next one, 89th question. A company makes a single product with the following data. Selling price is given, material, labor, variable overhead, and also fixed overhead. So total cost is 19 per unit and the profit per unit is 6. Budgeted output is 30,000 units. In relation to this data, which of the following statements is correct? So whenever such a question is given and there are certain calculated values, we do not know which one is correct. So we cannot start with the data from that, but then um, whatever are the options which are there, we have to keep testing. Test that whether it is true or false. So that's how we have to go further. Such questions are time consuming, but yet there is no other alternative. We have to proceed that way. A bit. A bit says that margin of safety is 40%. What is margin of safety? The
Actual sales minus break-even sales.
actual sales minus break-even sales. So, or budgeted sales minus break-even sales. So, find out what is budgeted cost per unit. Margin of safety is 40%. So, budgeted output is there. Break-even output is what we have to calculate. So, how do we calculate break-even output? Alternative formula is um, margin of safety is equal to profit divided by contribution by sales ratio. That is another formula. We can depend on anything. Test and see what is the since these are given in per units, we can take per units only, per unit values only. So first let's find out what is C by S ratio. C by S ratio is equal to uh, C will be 25 minus variable cost is 15. Do you see that? So contribution is 10. Then the entire thing divided by 25 is equal to how much? We have it as 10 by 25.
60%. No, incorrect.
40, 40, 40.
No, the answer is
Okay. 40 only, no? Material is 5, labor is 7, and then variable overhead is 3.
profit. We should be considering fixed as well, right? Like
No. We are contribution is salesman is variable cost. No? Contribution is only salesman is variable cost. So variable cost is 15. We should not include. So then in that case, it will become profit, not contribution. Just the contribution by sales ratio is only 40%. So if we calculate margin of safety which is profit by PV ratio is equal to profit is 6 divided by 40% is 15. So A is wrong. Try out with B. The contribution to sales ratio is 24. That is also wrong. Contribution to sales is 40%. We got it. So B is also wrong. Contribution by sales ratio is equal to 40%. Then test with C. C is the volume of sales needed to make a profit of 270,000 is 45,000 units. So test that one. Desired sales is equal to, I'm not writing the formula. Since you know that, I'll just put the values there. What is the fixed cost? Fixed cost is 4 per unit. So for the total output of 30,000, it will be 120,000.
120.
That's right, 120,000 plus the profit margin is 200. And, that's right, 270,000. Then divided by contribution margin per unit. So contribution margin per unit is 10.
Per unit.
So 120, 390. $39,000 units, not 45,000 units. So let's test D. The budgeted sales increase to 40,000 units. Okay. Budgeted profit will increase by 100,000. So here we just have to do the calculation as at present, what is their present profit is how much? 6 into 30,000. $180,000. So here it says that it will increase by 100,000. Let's check what will happen. Present and proposed. Output at present, output is how much? Output is 30,000 units. The proposed one, the number of units are 40,000. So let's check this one. We can directly start with contribution only because we know what is contribution per unit. Contribution is 10, 25 minus 15, 10. So is here it will be 10 into 30,000. And then here it will be 10 into 40,000. Minus fixed cost. Fixed cost is 4 into 30,000, 120,000. I think it's correct. Increased by 100,000.
Yeah.
So D is the right answer. I hope everyone got the solution. It's clear?
Yes, ma'am.
Ninety. Let's do 90. Okay. The management accountant of Carolyn PLC has calculated the firm's break-even point from the following data. Give selling price per unit, variable cost per unit, fixed overhead for next year. It is now expected that the product selling price and variable cost will increase by 8% and 5.2% respectively. By how much will Carolyn's break-even point for next year change by as a result of these changes? How to calculate? By how much will Carolyn's break-even point for the next year? So what is the present break-even point? Do we know what is the present break-even point? So let's first calculate what is the present break-even point. After implementing the changes, what is the new break-even point? And then find out the difference and then convert the difference into percentage. So these are the steps what we have to follow. Let's start with the first present. At the present, what is the break-even point? You tell me what's the answer. Just give me the figure.
Is it, ma'am, 131, 840 units?
I have no idea.
Acha, 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 okay, okay.
I
We'll
just asked.
calculate the entire thing. And
No. I think 79,104 divided by, it should be 12, no?
60%.
Simple.
Basic, I will do it percentage,
No.
contribution percentage.
Here they are just asking break-even point. Directly do with the number of units only.
Okay.
Okay.
But
That
where is the number of units given here, ma'am? Like,
no, we are calculating break-even point in units. So these are number of units. 6,592 is units.
कहाँ पे है 6,500?
I have calculated here. Fixed cost divided by contribution margin per unit. Fixed cost is 79,104 divided by contribution margin is 12. We got it as 6,592 units. Or according to your method, or it would be is equal to this into 20. So you got the break-even point as 131,840. Either
Correct.
ways, anything we can follow. Then talk about the proposed one. Proposed break-even point. That is what we have to calculate. But proposed break-even point has changes which are mentioned. What are the changes? It is expected that the selling price will increase by 8%, variable cost will increase by 5.2%. So let's see what is selling price. Selling price is equal to 20 into 1.08. 8%, no? So it will become 100 plus 8%, 108%. 108% is 1.08. So that's selling price. Then what about the variable cost? Variable cost will be, at present it is 8 into, it is 5.2%. So 1.052. So contribution is equal to 13.184. Then proposed break-even point will be 79,104 divided by 13.184. That's 6,000. Or we can also have this one as 6,000 into 21.6. Either way. So just find out what's the difference between these two.
592.
592. So 592 is the difference. At the present level is
It is
6,592.
rising. Okay, it is falling by 9%.
Fall by 9%. Find out the difference. So difference is equal to 6,592 minus 6,000, which is equal to 592. So we just have to convert it into percentage. The logic will be
Divided by 6,592.
present BEP is equal to 6,592. Change is equal to 592. The present level, if we are indicating it to be 100%, this is what percentage. So the same logic about cross multiplication is equal to 592 into 100% divided by this one. So this is 9%. Fall by 9% because
Yes,
it's
ma'am.
reducing.
Reduced. Yeah.
Will you try the other questions? Anyway, next week we will next class. When do we have our next class? Next Saturday we have our class.
Yes, ma'am. 31st.
So you can work out these questions till then, and then try it out. If you still do not get that, anyway, we can always discuss this in the class.
Sure, ma'am.
Or shall we do 91 because there are two products in this. I will try. I will also. I will show 92 also because there are two products here, and then.
Ma'am,
Yes, ma'am.
can we go to the previous question? 1 minute. Sorry.
Which one? Number you tell me.
The one which we did right now.
Okay. Yeah.
If you use these figures 131, 840, and 129, 600, I'm not getting the same answer. So
How
I
much?
took present BEP. No, I took present BEP 131, 840. And change, I took the difference 2240.
Okay.
I will try to do.
If 131, 840.
840 is 100%. Oh, made a mistake.
Two, two, four.
I'll take a screenshot of this question.
The sales value is increasing. The sales value is increasing. So this calculation, is it correct? 6,000
Yes,
into 21.6. Okay.
correct. It's correct. 129.
So break-even point also will change, no? Because the it is not proportionate. Increase in selling price and increase in variable cost is not proportionate. The selling price is increasing, so we cannot take the PV ratio to be as whatever you have taken the PV ratio to be as. So there it will change. Now the new PV ratio will be the proposed one. Let's put this one as a PV ratio or the contribution by sales ratio. Contribution by sales ratio also will change because the change in selling price and variable cost is not proportionate. So here it will be
You get 13 point.
so
Okay.
the
61. Correct.
okay. So then the proposed break-even point will be
600 only. You can think so.
the same.
Yeah. Basically, what?
That's again a differential value, right? I mean, how much it has fallen, how much it has come down.
But
It has to be that what is a fixed cost 79,104 divided by 61.037.
so it's the same.
Then you will get same answer. You will get the same answer. That's what I tried the first time. I got the same answer. Either we are making a mistake in our logic, ma'am. It's the only thing.
No, the logic wise, see, whatever is given, we have proceeded further. But it should
EP
also,
both are correct.
no, it should work out with the sales value also because there is no impact on the fixed cost. When the contribution, see, there is a
Correct.
difference in the contribution margin also now.
Correct.
Okay, I will also take it up and then see why we are not, because either ways we should get that one.
Correct. Yes, ma'am.
Okay, let me see that straight away. I'm not able to figure it out, but I will definitely look into this and then we'll discuss on this one in next class. What if we are using that? Why is that it is not?
We cannot use. Okay, ma'am. We'll figure it out next class.
Yeah.
By next class.
There are two products, product F and product G. So the contribution per unit is given and sales units are given as 150 and 100,000. So the first question what we have done was about the weighted average. This one. 84th question. It is about weighted average. The same logic we have to apply because there are two products. So 84th question also we have product X and product Y, and the proportion is given. Here again for this particular 91st question, product F and product G are given. So the weight is given as 150,000 and 100,000. So we need not take the entire weight as 150 and 100, but simplify it and make it as 3:2. So take 3 for F and 2 for G, and then find out the rest of it is same. The denominator has the weighted average contribution margin per unit. So weighted average contribution margin per unit will be 3 into 10 plus 2 into 4 divided by 3 plus 2, 5. I hope you are doing it. Excel is there on the screen, no?
Yes, ma'am. Excel.
Okay.
Are you typing anything?
No, I'm not. I just
Okay.
dictated. I just
Okay.
dictated. Just do the weighted average taking just simplify this one as 150 and 100. Simplify that, it will be 3:2. Go ahead with 3:2. That is the only point. How much is weighted average contribution margin per unit? Okay, it's 38. 38 divided by 5. How much is that? 7.6. Fixed cost is 1,400,000. So break even point is equal to answer is not right. What's the answer? Did you get the answer?
No,
I
it's
didn't
as
get
I guess we can go with the option B,
B.
nearest one.
No, I made a mistake. It is not break-even sales in units. I just calculated break-even sales in units. The question is asking the break-even point in revenue. Okay. So now here what we have to do is, if that is the case, the denominator will be the average contribution margin. If it is revenue, I didn't look at that. So if it is contribution by sales margin, interesting this. Product F and then product G. So product F has selling price of 40 and here it is 20. Then product G has contribution of 10 and 4 here. So contribution by sales margin or ratio, which will be 10 divided by 4, and then here also the same thing. So now when we calculate the average contribution the total is this one, and then so we have 22.5 fixed cost break even point is equal to 1,400,000 divided by I'm not getting to the closest to value.
I'm here we to use the break-even point and sales value, right? Where we get fixed cost is given and contribution sales ratio we have to find out. And then I guess we should be able to get the answer, right?
Weighted average when we calculate, we're not getting. So that is the logic. 45. So divided by 2 should be is 22.5. Quickly try out with the total amount.
Ma'am, answer is 2 lakhs.
No, the answer is not 2 lakhs.
And it should be D actually.
How did you get that?
I'm just applying this formula, this break-even point in sales value where fixed cost divided by contribution sales ratio.
Okay.
Cost is given and contribution sales ratio we need to find out from the given data, right? That we have contribution per unit divided by unit sales price.
Okay, so you've calculated the contribution per unit for each of them and then multiplied into the selling price.
Yes, and I added both of them and divided by 2. I mean, I took the average.
Okay.
So answer is actually a little bit far. Not it is asking nearer, but it is coming somewhere around 6 lakh something. Yeah.
Let's try with the total part of the total values. If selling the selling price per unit is 40, so 40 into 40 into the total value is 150,000. So try it out.
Ma'am, what is that sales margin you've written? What is that exactly?
What did I write?
Like in the formula, you've written average contribution that we found out. What is sales margin in this? Divided by sales margin.
Contribution by sales
margin, that is.
This is the entire one. This part is one thing. Average contribution margin. Average contribution by sales margin. So this entire thing is one part of it. This is entire thing is denominator. I don't know. Somehow I lost the term.
We had written here over here the weighted average.
Here,
we have written. Yeah.
we have taken 0.45. That's the
That's the
average.
total. No. That's the total. I just added it here.
Correct.
No, we have to take average, right? Not the total.
Not the total. So I just calculated the average, but that average is not working out.
It
So
will
I
not
erased.
get.
So I erased it.
Okay.
So I'm trying out with the totals and then to look at.
You can calculate entire thing with the unit price only. I mean, as a per unit only, and then later you can multiply with the.
So in that case, break-even point for both of them are coming out to be as.
Oh, sorry, 107.33 is per unit I'm getting. Then if we multiply and then that is the addition, and then when I average it, it will be around 53.67.
the averages are not working out. It is actually when we try it out with the total value, it's not the if it was the per unit basis, the weighted average was the right thing. But here I didn't see that it is total current break-even sales revenue. So total sales revenue is calculated. This is total. Find out the total sales and total contribution, and then find out what is the contribution margin ratio. Contribution margin ratio is 23.75. So with that, we have arrived at the correct answer, which is D, 5,894,737. So I will also make a note of it. If it is break-even sales revenue, we cannot go with the average contribution margin. We have to find out the total contribution by sales ratio. I will also make a note of it. This is total contribution margin. Contribution by sales margin. So take the total values, which is 8 million something, and then this is 1,000,009. So find out the ratio. The total contribution sales margin ratio is 23.75%, and then the break-even point is 1,400,000 divided by 23.75%. So we got it as 5,894,737. Shall we go to the next topic? And a lot of time got wasted here. We'll go to the next topic. So in a continuation of cost volume profit margin, this particular topic, cost volume profit analysis or the marginal costing analysis, in continuation of that is the decisions which are dependent on this technique, the marginal costing technique. So there are many decisions which can be taken with the help of this logic about dividing the cost into variable cost and fixed cost, arriving at contribution, because contribution will help us to arrive at decisions. But your syllabus has only two different things here. One is limiting factor, actually limiting factor only. According to the cost volume profit analysis, there is one limiting factor that is a decision making situation which can be solved with the help of marginal costing technique. In your syllabus, this particular topic, planning with limiting factor and linear programming, key factor analysis and linear programming are the two things which are given. But let's first understand when do we use this one. Here in case, now the title says there is a limiting factor. In that case, how do we plan? What is limiting factor? If the resources, if one resource is a constraint, it is not abundantly available, if there is some restriction in terms of that and it is not abundantly available, then in that case the focus will move towards that particular thing. For example, maybe material is not abundantly available. There is only some limited amount of material available. In that case, that material only has to be used and the profit has to be maximized. Let's say the students are writing an exam, and in the exam last half an hour is remaining and the student is supposed to student still has to answer two different sections, one essay section and another one is the MCQ section. Let's say that. Then utilizing that half an hour time, how well can the student maximize his marks is the focus there. So if he is focusing on that part of it, if he wants to maximize his marks, in such situation, if he keeps writing the essay, maybe sometimes half an hour is also not sufficient. Rather, if he starts with MCQs, MCQs can be answered in half an hour time, less than half an hour time. Also, he can also even go for maybe starting with the essay part of it. So here, both the situation, but when we look into that, both these sections, his focus is towards maximizing his marks in that limited time. So there is a constraint, availability of time, and the objective is to maximize his marks. So also in a business, where the objective is profit maximization. So to maximize the profit, and if there is a limiting factor, if something is not abundantly available, some restriction is there, some constraint is there, like material availability, labor hours may not be available, or machine hours available are less, or demand is less, or some kind of thing which is not enabling them to take decisions as they like, but their focus now will shift towards whatever is the limiting factor. If there is only one limiting factor, only one constraint, we go with key factor analysis. We go with key factor analysis. If that is not the case, then we take the help of linear programming. Key factor analysis and linear programming. Key factor analysis, it says that first calculate what is contribution per unit. After that, calculate contribution per unit of that limiting factor. Then rank the products according to their profitability, and then start allocating the resources accordingly. So that is the situation here. We will see one question. Um, Question number 99. So we'll answer that question now to understand it better. I'll just get the question. 1 second. Do you see Excel sheet here? For question number 99.
Yes, we can.
Okay, okay. A company has the following production planned for the next 4 weeks. The figures reflect the full capacity level of operation. Planned output is equal to the maximum demand per product. And we have A, B, C, D. And then selling price is given, raw material, direct labor, variable overhead. 3 different variable costs are there. Then fixed overhead cost is also there. After that, the profit, planned output, direct labor hours per unit. Then it says that the direct labor force is threatening to go on strike for 2 weeks out of the coming 4. This means that only 2,160 hours will be available for production. Will be available for production rather than the usual 4,320 hours. So now they see that there is some kind of a restriction. Earlier they had 4,320 hours, but because the the laborers are going on a strike, so the number of hours availability will come down to 2,160. So utilizing this 2,160, they have to think about maximizing their profit. Definitely there will be an impact. Earlier what labor hours were available are now not available. So here in this case we have to understand which one is more profitable. The question further says that if the strike goes ahead, which product or product should be produced if profits are to be maximized. Please place a tick in the boxes in the table below as appropriate. So what is that?
Product B,
How do you know?
ma'am, the planned output is more and the direct labor hours is also less. The profit.
Okay, so just by looking at that, okay,
Yeah.
doesn't let's verify whether it is the same thing or not. There are 4 products A, B, C, and D. Let's find out what is contribution, because everything should be converted in terms of contribution, isn't it? Contribution per unit. Since the data is also per unit, we can find out what is contribution per unit. How much is it for A? Simple step is we can calculate it as fixed cost plus profit, contribution. Sales minus variable cost is equal to contribution. Contribution is equal to fixed cost plus profit. So add 16 plus 30, no? 16 plus 30, 46.
46, 52,
52,
then 50.
21.
This is
Okay,
21,
21.
yeah.
Okay.
50, next is 50.
50, done. Then the number of hours needed for each unit is 6. Direct labor hours.
The last one will be 60, not 50, ma'am. D.
Oh yeah, sorry.
Okay. Direct labor hours per unit. What is the requirement of direct labor hours per unit? We see that as 6, 8, 3, and 2. Contribution per labor hour, because everything has to be looked from, for every single hour of direct labor hour used, how much contribution is generated. That is what we have to look into, that contribution per labor hour. So here it will be 46 by 6. So now we have to rank them. Step number 1 is first find out what is the uh, uh, limiting factor. Limiting factor is direct labor. Take what is contribution per unit. We got the contribution per unit. How much of how much is the requirement of the limiting factor is what has to be taken, and then find out what is contribution per unit of that limiting factor. So every hour of direct labor are used for production of product A, it can give a contribution of 7.7 for product A. For product B, it is 6.5. Product C, it is 7, and product Q, it is product D, it is 30. So when we rank them, we see that Q stands 1. Then we see D stands 1, A stands. I'm getting confused between the row titles
4
and
and 2, ma'am.
okay.
4 and 2.
This
B
is
is
4.
4, C is 2.
And then this is 3.
3.
Okay. Which ones should be produced? Ranking is done. How many hours are available? Only 4,320 hours are available. So total hours available. So total hours availability, let's put it as 4,320 hours. Okay, fine. First one is product D. D will be produced. If product D is produced, totally how many hours will be needed by product D? D is most profitable according to contribution margin per unit of limiting factor. We see that D is more profitable. So the hours required by product D. So product D, the hours required by product D will be product D planned output is 400. Each unit requires 2 hours. Do you see that? So here it will be 800. So for the first one, it will be allotted. $800 will be allotted. So now remaining is 3,520. Next in order, which product is there? Product A is there next in order. So product A requires, the planned output is 300 units and it requires 6 hours. So we have 1,720. The next in order is C. C planned output is 240 and into 3. So the next one, product C, we see it is 240 into 3. That would be 720. I made a mistake, no? Nobody is telling me. The number of hours is reduced to 2,160, not 4,320.
Yes, ma'am. 50%.
So 1,360 and there is no option for the other products. So which ones will be produced? So only 2,160 hours, not 4,320 hours.
B and
2,160. So D will be produced. A also not all units can be produced because when all units have to be produced, they do not have the sufficient number of
yes, ma'am.
time.
Only
Okay, so few units of A will be produced, or if it is considered as total, nothing of A will be produced. So A will not be
but ma'am, profits have to be maximized, so a few products of A has to be produced.
that's right.
Huh.
But then here we have to mention that not all products, only few units. How many units? If the question says that how many units can be produced, that
Divided by
divided by 6. Remaining number of hours are 1,360. So using 1,360 divided by 6 gives us the number of units. So here it will be only few products will be produced. So A also will be produced, but it will be few.
227 products of
Okay.
A.
So D also will be produced, and then this will not be produced and this will not be produced. I made a mistake here by writing it. This is not. If the question further says that, if the question says how many units should be produced, if it is says this is optional, so I'll just change the color for this one and then let's see.
227 product A.
Product mix, if it is asked. D anyway, all units, 400 units will be produced. For A, because A can be produced, A will be, each unit requires 6 hours. So the number of remaining hours are 1,360. So divided by 6, how many ever units?
227.
1,360 divided by 6. 227. So that would be the product mix. This is not asked in the question, but if at all, if they ask, if such a extension of the question is there, maybe we can do like the steps are: first find out what is contribution per unit, find out what is contribution margin per unit of the limiting factor, rank the products, and accordingly take a decision about which one to be produced and which one should not be produced. Or proportionately, if we are asked, this is how we do that. Product mix, if we have to find out, The first one, the first rank is given to product D. So product D, 400 units, all of them will be produced. But the second one is product A, which requires 1,800 hours. So if it is 1,800 hours, all units of 300 cannot be produced because 1,800 hours are not available. Only 1360 hours are available. So proportionately, we see that 227 units can be produced. Let's continue with the next question. I think only one question is there according to the limiting factor. So if there is one limiting factor, we depend on key factor analysis. Whatever we have learned in today's class will be the base for throughput costing. The one which we were supposed to start, I said we will do it after a while after we do the key factor analysis. So remember this one. We find out what is contribution margin and then find out what is contribution margin per unit of the limiting factor and then take the decision. The same thing is applied there with the change. There we do not call contribution, we call it as throughput. And what is that change is what we will see in the next class when we see that. Continuing with this one, suppose if there are, if the limiting factor is not just one limiting factor, if the limiting factors are two or more scarce resources are there, then we have to depend on linear programming. Linear programming, I do not know how many of you have learned this linear programming. This is mathematical in nature, but we do not have that advanced method of using the simplex method and arriving at the answer. Mostly, according to the syllabus, we have to depend on the graphical method also. There are certain numericals also used, but then we depend on the graphical method a lot. So linear programming, wherein there are constraints. It is not just one constraint, multiple constraints are there. So how is the solution arrived at under linear programming is, the first thing is what is the objective has to be defined. So whatever is the objective, let's suppose if they are looking at sales, sales has to be maximized. If they are looking at profit, profit has to be maximized. Or cost part of it, cost has to be minimized. So there are either a maximization objective or a minimization objective. First we have to identify what is the objective of that particular situation. Either it goes with maximization or it goes with minimization, maximization objective or minimization objective. Then, because now we see that there are constraints, that is, it is not equal to, it is not. So then we frame that into equations wherein there is some kind of a limitation there. Now those constraints should be framed into the equation, or the relationship of that with the limited resources is defined there. Set out the constraints. Then here it says that show it in a graphical presentation. Draw graph showing constraints by identifying the feasible region. Then after that, we find out what is the optimal solution and solve that. The other way of solving linear programming is by using the equation, the inequalities, and then equating them to value and then arriving at that. So the constraints, when they are solved, we are not looking at that now. I'm just explaining. The constraints have to be plotted on the graph. How to do that, we will see it in the next class. Each constraint has to be, we have to find out the points on the x and for the x value and the y value, and draw the lines. Draw the lines of as many number of constraints are there, that many number of lines would be drawn on the graph, and then cover the region, shade the region. The region which is covered by all the constraints is called as the feasible region. And for the feasible region, whatever are the connecting points, we substitute the connecting points in the objective to arrive at the optimal solution. I said optimal solution or the objective, it could be to maximize or minimize. So the region which is covered by all the lines is called as the feasible region. But how do we draw the lines is what we have to see, and we do not have the time here. So we use it with the help of graphical presentation, or some numerical questions also, numerical values also can be substituted, and we have to find out. So in context of linear programming, there are two things which are given here as, one is slack and one is shadow price. Okay, all these things we will look into in the next class. So next class we will see what is how to we solve the questions about linear programming, and go back to throughput. We have left two topics in between. One is throughput costing, and the other one is environmental accounting. So those topics we will finish it in the next class.
Sure, ma'am.
Okay.
Ma'am, once question.
Yes.
Next Saturday, is it possible for you to conduct a class in the morning time, 10 o'clock?
That will be great. In fact, actually, I mean, I got to know that you only have put, I mean, I don't know whether from your students' point or management point of view, but you are very particular that it should be from 2 to 5.
Yes, the thing is, there was a request like, on 31st is actually a holiday, but the thing is, the class will be conducted only, for performance management. So that's the reason, most of us.
Done. I'll make a note of it, and then I'll convey this to people in our organization. You want it from 10 to 1, isn't it?
Only on that day. Yeah.
Only on that. So
Yeah.
I will inform in my organization. You please inform it to your concerned faculty.
Definitely, I will do that. Yes, ma'am. And ma'am, I received one email today. I mean, it contains only one recording, right?
Only one recording. I didn't.
No, there were 3 files, so I was just trying to check it in that. But then I found it. Yeah, there was one text file and all other supporting files were there.
In fact, actually, the size of each recording is so huge that uploading onto the drive and sharing that also takes time. That's why I mean, from my end, I keep postponing because that's so time consuming. But I should be sitting with that. Maybe this holiday I should sit with sending the recordings to. It's not only you who are asking, but others also. I have to sit with one full day, and then I'll figure it out. This file immediately I will send it. The one which we have solved in today's class. It has
the Excel file. Yes.
The Excel file and the last class also. Right now, immediately I will send that, and then recordings I will send it during this holiday.
And ma'am, one more request. I mean, I happened to have a call with our HOD, so where it was said that
I'll stop the recording and then we'll talk.
Yeah, sure. Sorry.